Okay. All right, guys. Let's jump right into it. Again, we had a crazy week last week. Nice start to the new week. But again, it should be a somewhat quiet week until we get, this Fed announcement on Wednesday. So I'll briefly pull up the big picture for a moment. And, the big emphasis here was, keeping an eye on the macro range the market has been in. The S&P has been in this, beautiful breakout stage for many years now. We've had, some pullbacks, we've had some bear markets, we've had some corrections, but the overall trend continues higher. And right now we have this tiny little pivot low under 630, and it just seems like this mother of all trend lines resistance area needs to get tested. And that's where we've seen very easy trading lately. We buy Tesla at 360, it's at 423 days later. Buy Walmart at 96, a few days later, it's at 104. And the list goes on and on. We've been getting these very easy breakouts, which is amazing. From the trading standpoint, we cannot complain about easy breakouts, but we have to just be aware of where the market has came from in the last few months. And as much as we want this to continue, and it most likely will, this trend line has been resistant for years, and more than likely this area is going to continue to act as resistance. And we just need that, eventual pull-in like we've seen in these periods here. We've seen these little pull-ins. Again, when the market's running week after week, month after month, we don't expect it. And that's when we get, a few weeks down or a month down, and then the market can kind of consolidate sideways and power back up for that next push higher. So this isn't, when I'm talking about the caution up here, it's not sell everything and run for the hills. It's just being aware that when the pull in comes, to not be shocked. Even this morning with Tesla gapping up, we talked about this morning before the open. We should expect profit taking off the open because the thing is gapping up nearly 10% from where it closed on Friday. So any person who was in it from Friday or Thursday and is up 15, 20% in a couple of days is going to want to take profits. It doesn't change the overall trend of the name, but we have to be aware and expect that to happen. And that's what we saw today. So again, markets very strong. We have Powell most likely cutting rates on Wednesday, which will just fuel the market even higher. Very rarely does the Fed cut rates when the markets are at highs? Typically, this is something that we see, like we saw back in COVID, when the markets are, getting destroyed. That's something to ease the market and give us, some bullish momentum higher. At highs, it's really not necessary, but he's going to use, the weak labor market as his justification for making this potential cut of probably 25 basis points. Again, you can see I'm making a statement of what's about to happen on Wednesday because the Fed has been very transparent about what they plan to do with the same emphasis of keeping the market calm. Back in the 80s, before my time, the Fed was much different. If you're watching those videos, those Fed announcements, they would check how, big the briefcase was when the Fed chairman walked in. So it's a much different time. It's not as secretive. They want to have that information out there to calm the market and keep everyone, doing what they're doing. So again, we had a phenomenal week. It does seem this trend, as tiny as this move higher is, we're probably going to have to touch this area. And when that happens, I'm going to have these arrows drawn out. We should expect that pull in, that slight consolidation, really anything above 620. And in reality, really 600 is fair game. And if we do have this kind of pull in, where this comes into here in time, a few months out, that gives the market a 100-point range to trade in. 680, 700 resistance, 600 support. It's a 100-point range for the market to flag out in. Amazing trading environment if that were to happen. And when that breakout's ready, you get that next move through 700 to 800, and then the next pattern forms. So we have, the S&P and the Qs, kind of playing tag of who's the leader. Last week, it seemed like the S&P was taking charge. Now we have the Qs breaking out again. Blue sky breakouts, new all-time highs, path of least resistance looks to be higher. Now, I saw a tweet that's been circling around about this politician and trying to kind of, people trying to fear monger. These politicians know more about the market than we do. They have insider information, XYZ, but some politicians still are bad traders. So for this individual, he put $215,000 into TZA. This is a bearish short ETF betting against small caps. And this guy, without a doubt, will lose money hand over fist. Even if the small caps were to crash a month from now, he would still lose money because, and this is why we avoid these triple leverage ETFs like the plague. This name actually is my worst name in the history of my trading career. The biggest loss I ever took was in this name, and I learned this lesson and this exact point that unless small caps crash this week, this politician will also learn the same lesson. And I learned this many years ago. This was back in 2010. I was back in college, and the debt bubble was the debt crisis was a big topic at the time. I had gotten out of the market. I was long going into that vote. I got out and I got short using TZA and the Dow Jones equivalent and the NASDAQ equivalent. And I made very quick money very quickly when the debt ceiling did not get raised and the market fell into a correction. So when the market dropped 10% in a few weeks, TZA and these leverage ETFs went up 30% very quickly. And I thought I was the smartest trader on the planet. What I didn't realize is that these things daily rebalance. So if the market's up 10%, this thing should be up 30% in one day. But if tomorrow the market is down 10%, this is going to drop 30%. And we can even see here, if this politician would have gotten short in April when the market was getting destroyed, he buys it at 20, market's looking like it's rolling over and going to zero, and then the market rallies. When the market rallies 30%, he loses 70%. And this is where the timing of these products is so important. This is not an ETF you can hold for the long term. If you hold this for the long term, this is the only thing that can happen. I'm going to zoom out to show you it is statistically impossible to hold these leverage ETFs for any length of time and expect to make money. It is just statistically impossible. I'm zooming out here just to show this example. And now you're wondering, how is this stock $1,500,000 a share back in '09? It wasn't. They reverse split these stocks pretty much monthly. You can see the 1-for-5 split, 1-for-3 split, 1-for-4 split, and it goes on and on and on because these leveraged bearish ETFs are designed to go to zero. It literally says it in their prospectus. And if you hold these things, they go to zero. That's just all it is. This thing will just bleed down to, $3, $4 a share. They'll reverse split it and they'll make it look like it's a $50 stock again. GE did this, a few years ago, and it's just putting, lipstick on a pig. So do not, my biggest recommendation of things to avoid are these leveraged ETFs to the short side. You read the perspective, designed to go to zero. And this politician will more likely lose at least 100 grand in the next 30 days as this thing continues to drift down to, $4 or $5 a share as the small caps continue to just grind higher. This is not, major market melting down price action. This is climbing back to retesting highs. The fear is not there yet. So do not follow this guy. But moving on to some sectors, we have materials, little Mickey Mouse flag forming here through this 210. Nice little sector to keep an eye on. Again, tech, blue sky breakouts broke out of this textbook bull flag last week, continues to trade higher. Again, path of least resistance seems to be higher in the short term. And we have, two sectors to keep more of a closer eye on. We have consumer discretionaries gapping up into the all-time high resistance level. Again, we talk about this very frequently, where the first retest is often met resistance, and that is exactly what we saw today. Consumer discretionaries gap up into the prior all-time high. And if you ask yourself, if you bought this ETF a year ago, the beginning of the year when everything looked amazing, and you sat through this dramatic drop, and now you have a chance to get out break even, your first instinct myself, if the average person is going to say, yeah, give me my money back. I want to get out. And that's what creates resistance. So first attempt, typically sellers are met. We should expect consumer discretionaries to pull into this trend line and work its way back up there. Maybe it takes 2 weeks, maybe it takes a month, but eventually we'll get that blue sky breakout through 400 like we saw even with the Dow 30 names recently. Same thing here. We can see all-time highs. We see months later a retest, and then months and months later, we can still see resistance here. And eventually, when it breaks, resistance now flips and becomes support. So we could expect somewhat of a similar price action in consumer discretionaries, but they're still at this technical retest. They still need to pull in, consolidate, and then set up for that push higher. Now, we've been talking a lot about healthcare lately. Healthcare has been a sector that has lagged significantly in this overall rally, but it did hold up since April in a very textbook stage one base. And recently, it's been starting to push through and break what was the resistance area in this stage one base. So this is very healthy action. When the sector or name is in a stage four breakdown, where you continuously see lower highs and you continuously see lower lows, this is the time to avoid whatever the name is like the plague. This is often the time when someone wants to, bottom pick and try to get the low. You think of like UPS right now, or even like Lululemon. These are not stocks to buy when they're in this perpetual stage four breakdown. This you want to avoid, at all cost. But once the name can start to base out, like healthcare has done, you know where the out is. We know that the low of the base here is this 230. So we're still keeping a close eye on healthcare. Again, most likely needs to pull back in within this recent flag here, probably pull back into 250 and work its way back up. Maybe in a few weeks, 2, 3 weeks or a month from now, we get that next push out of this base, and then that stage two breakout stage can begin. Lastly, we have industrials. Again, we're talking a lot about these retests. We're talking a lot about these bull flags. We can see here, industrials run up, phenomenal run off lows in April, puts in an all-time high, retests that high, and now it's flagging out, it's consolidating. And all we want to do is wait for the break of this 297, just like we saw with the tech sector. Same exact flag, couple attempts at resistance, finally breaks and goes. So the industrials, this is a time to start scanning this sector and looking for potential trades in that sector for when that breakout comes. We're going to move on now to some top ideas that have been on the radar. First up, we have this AS. Again, we've been keeping a close eye on this bigger breakout through 40. It had that breakout, end of August, but it was very difficult to chase this name through that 40 breakout when it was already up 6% of the day and technically fourth day up. So we did not get involved on that first break. It's pulled back into support again. It's still flagging out. Nothing is technically broken. And now we can see a tiny spore buyback setting up. Again, no dire rush to get into this, but just keeping a closer eye on that 40 breakout in time. Next up, we have Polaris. For any of those that like to drive, four-wheelers, we can see this big base that's been forming. We can see how many times this name has been battling with this 60 seller. Again, last week kind of tickled through, but no real volume on that breakout. And it's still pulled back in. And the key thing that we're seeing here is we keep seeing higher pivot lows. So there's no low that gets taken out and forms a new low. We see here's the low, new higher low, new higher low, new, and then newer higher low. Buyers continue to step up and support this name, and the sellers have been holding 60 down. So as these buyers and sellers meet at this point, eventually someone has to win. And in this pattern, typically buyers are going to push this name higher. and break it out of this massive base. So keeping a close eye on this Polaris. Again, it's getting much tighter. Weeks ago, if you were buying 60, you had to give it a 50. Now, if you're buying 60, you're giving it 55. It's half the risk that it was just a few weeks ago. That's what we want to see. We want to see the name tightening up under those breakout levels. Next, we have this RRR. Again, if we're zooming out, we can see this name has never traded above $64 a share. So we refer to as a blue sky breakout. When it gets above that level, it's all new price action. It's all new price discovery. What you're seeing or what we're seeing in the Qs and the S&P is that exact thing. New all-time highs. There's no real resistance, and the name can typically drift a bit higher. So probably still flagging out here. Needs a little bit more time, but that 64 breakout, we have alerts set to remind us, textbook breakout pattern forming. Next, we have this Roku, and we can see this massive base that's been forming for the last few years now. We're zooming out a little bit. Again, this is, we're going to talk about Baba in a moment. We can see this name got, really decimated back in 2022. But since then, it's based out in a nearly, 70-point range, massive range here. Again, given what it did prior, it looks very small, but there's a huge range. And over the past couple of years, hasn't done much. Just can't break 100, can't break $30, back and forth. But as of late, it's starting to trade a little bit tighter, but still, 20% range, just given the recent ranges it's been trading in. So still want to keep an eye on this 100 level. Again, it failed earlier this week. I took a little trade in it through 100, got out under 99. Again, if I'm looking for a break of a 5-year base and I'm buying the breakout and it doesn't break out, clearly I'm wrong. No point in holding name, no reason of trying to find a reason to stay in. If this is breaking 100, it should be at 105 that first day, closing bullish engulfing. And there's some confirmation that that base is broken. Did not get that last week. Took a tiny 1% loss. We'll watch it pull back in, and the next time it gets up there, we'll gladly take another attempt through that 100 level. Next, we have this MLM. Again, we're talking about materials before, flagging out nicely sector-wise. This MLM blue sky breakout, again, cannot break above 625. We can see it got up here back in 2024, tries it again. Here's that retest we're talking about earlier. This is when the buyers who are buying here sit through some pain, now are gifted the chance to get out break even. They typically take that gift, creates resistance, and now we see a very tight consolidation compared to just this last. Again, these are weekly candles, but look at this weekly candle here. 625 down to 580. 40 plus point weekly sell-off. The last month or so, name's been trading in a 25-point range, extremely tight ranges, which is, again, what we want to see. These buyers have been stepping up, and we're seeing these higher lows continue to form. And sure, 600 can still get shaken out to the downside, be completely normal price action. Our only focus is when 625 wants to break. And that's where we can find the tight entry at that time and adjust the game plan accordingly. So again, with tech breaking out, it's been somewhat interesting that NVIDIA is still flagging out here, almost lagging the sector and the NASDAQ. So NASDAQ's all-time highs, tech sector all-time highs, NVIDIA, big component of both of them, lagging still in a bull flag. So if this breakout continues and NVIDIA starts to play catch up, we should expect that push to continue. But it is interesting to see this lag. And we saw this earlier this year where Apple was lagging in the rally and it eventually played some catch up. So, don't count NVIDIA out. Everything chart-wise technically looks very good in the short term in this nice, 20-point range here. If and when it does break this 183, that's again the key spot we're keeping a focus on, should see at least a $20 move higher, which would send it to about $200 a share. Next up, we have Hilton. It's HLT. Again, our buddy John was put this on our radar, Mr. Dominguez, and we have this very textbook setup forming here. Again, all-time high, retest, flagging out, most likely going to shake this 270 to the downside in the short term. Not a big deal. We only care about when it wants to break 280 and close above 280. So want to keep on the radar for that breakout coming down the road. Next up, we have this Lin, another blue sky breakout. Again, the last few weeks, I've been a little more cautious with the market overall, but seeing all these phenomenal chart patterns out there, it leads me to believe that we probably see some higher price action because these are just very textbook developed patterns that when you have a market that's starting to get weak, you don't see a lot of these very strong patterns. If the market is really extended and we're about to see weakness, this on the radar list is going to be two or three names because a lot of names are just getting smoked, getting taken out, where there's a lot of strength out there. There's a lot of major bases forming, a lot of major names breaking out. That leads me to believe that maybe it's a little bit more of a wall of worry than some bigger underlying issues under the hood. So BSX is one of those where, again, not ready to break that 108. One of the members was asking, like, should they buy in at 100 or wait for 98? On the way down, it's going to go much lower than you and I anticipate it to go. Again, resistance, typically that air resistance holds much more perfectly on the way up. On the way down, you don't have people acting as rationally as they do when the name is working in their favor. So when names are coming into support, this is not the time to catch this falling knife. Let it shake out. Wait for these green candles to come back. You don't want to be trying to catch this low. This is a fool's errand. You're going to waste endless amounts of time trying to buy here. But here, after the low is put in and you get another little consolidation here, this is the real spot that you want to look for an entry after the name has had some weakness. For those looking at UPS or looking at Lululemon, some other conversation I've had with members privately that are looking to buy them because look at these big deals, those great deals are going to become even better deals with time. This whole run in UPS looked like an amazing deal every time until it took out new lows. So until it gets out of this channel, avoid it. BSX, breaking down when the market is breaking out, avoid it. That you're not forced to buy a weak name in a strong market. Even though this name overall is very strong, this is not the action you want to see when a market's ticking new highs. So let it shake out. Maybe it's got to go even lower. Who knows? Who cares? Let it shake out. Wait for this first consolidation after the low is put in. Much easier to define your risk and buy on the way up than buying on the way down, and it's purely reactionary of when to get out. Last up on the radar, we have this Garmin. Again, another blue sky breakout. It's been setting up, almost a year now. Could not break this, 240 area. Couldn't break 240 again. Couldn't break 240 end of August. And again, just needs to pull in a little bit. But if and when it wants to break this 240 to the upside, that's when we want to be involved. We don't care about if it's going to H over back to 220 and get back up there. We just want to be ready for when this level breaks. So these are some names to keep on the radar. Again, my current names I'm in, as always, keeping the names I'm in very small, couple names a week, 1, 2, 3 stocks max. I don't need to be in 20 names. I don't have 40 orders in. Focus on the top ideas. So small position right now is this IDXX. I've been trying to get an entry through this 650, just hasn't been ready so far. 625 has been, key support right now. I've been keeping a tight stop versus the low a day. So given this about 10 points, again, $650 name, percent or two of risk, not a big deal. If we do get a break out of this 650, I'm looking for a move back to these highs, to retest this high here. So not getting the love, not really getting the volume in this name just yet. Not a big deal. If it fails tomorrow, I'll take the tiny loss. No big deal. Walmart, again, we continue to trade this name very well. We had a good trade in it in August through this 100 into this 104 area. And when we were talking about back then, over the last couple of weeks, has been, this shift to somewhat of a range bound market, which now the market's breaking out and we're no longer in it. But this Walmart has been very much in a range between this 95 and 105. And we're just trading the range. We're buying up off of support. Again, I'm not trying to buy it anywhere here. I'm not trying to be a hero and call the bottom. Let it settle out, let it tighten up, and I want to buy it on the way up versus that out. And we've gotten a phenomenal move higher. Again, today, inside day, $1 range. There's very clearly a seller at this 104, and it is very apparent that there is a bigger seller at 105. So for this Walmart, I'm going to delete some of these lines to avoid some confusion here. But we can see eventually we'll be buying this 105, or I'll be buying this 105 breakout. Eventually, that's going to be the buy. For right now, as Walmart flags out under this level, 104, 105 is acting as resistance, and I want to sell into 104, I want to sell into 105 until it flags out further and really wants to gear up and break this high. So for now, I'm going to continue to play the range, buy off support, sell into resistance until it gets tighter. And it will come a time where instead of me trying to sell 105 tomorrow, in a month or 2 months, I'll be looking to buy 105. And that's just how these patterns develop. So we're doing very good with this Walmart, just letting it do its thing. And this past week, or the past couple of days, talk of the town has been this Tesla. So we called it very well. Again, our big focus is finding very tight consolidations. We can manage our risk and keep risk very tight. And that's exactly what we saw last week. We saw this 360 was key resistance. We can see going back, pretty much this entire year since February, Tesla cannot get above 360. This was the new pivot high. Gets back up there in May, can't break it. Tries it in June, can't break it. Tries it again early September, pulls in a couple bucks. So we talked about that last chart talk. We bought it on the way up again through that 360. And then we get that news over the weekend that Elon was buying above where we were buying it, average price, again, richest guy in the world. But it's good to know that the richest guy in the world is in the trade with you. But he was buying it, 380, 390. We're buying 360. Again, we're trying to sell 500. He's, holding it forever. But we got that big pop. And we talked about it this morning in the chat about our expectations with Tesla. Give me a second. Let's see here. So we're talking about Elon, again, buying 370 to 396 a share a couple of days after we got in. Great to see. And we had this massive gap this morning. Pre-market was at 428, almost 8% higher from the close on Friday. Again, phenomenal action, but we had to, we should not be shocked if selling pressure comes in, and we need to be able to stomach the pullbacks. So we were talking about this, at 8:50 this morning, and the key factor in the trade is the moving average. So we saw back in November when Tesla flagged out, this is, I would almost call this a Mickey Mouse flag, but flagged out for a month, breaks out and goes on a 100-point run here. And the whole way up, the 5 EMA, the 5 EMA catches up for the breakout, and the whole run up, Tesla never gets close to 5 EMA until that trade breaks. So we're seeing a much broader pattern that developed here. Look how little this consolidation is compared to, this 6-8 month long chart pattern that's been developing. It's been just coiling up and getting tighter and tighter. And when that gets so tight, eventually someone has to win. And for now, the buyers have clearly took the stance here, pushed this name, nearly 70 points higher in a couple of days. And even if it pulls in tomorrow, still fine. This is a big move. If you're in this name or been in it for a while, really this macro resistance area above 500 really should be the target. I'm treating this more as a swing trade. So I bought 360. If this thing fails and comes back to 360, I have no issue walking away the break even trade. And I'm going to try to stick with this as long as this respects the 5 EMA on this way up. I'll stick with it as long as it can until the 5 EMA breaks, or if it comes back to my price, which more likely break the 5 EMA before I see it back at my cost basis. But again, the key emphasis, very tight consolidation under a major chart. This was a major chart pattern. This wasn't something that took 2 days to develop. It took the better part of a year. And now we're seeing that expansion coming. So staying on that point with Baba, this is, one of my largest holdings. I've been in Baba for many years now. And this name as well has based out for the last half decade. So I've been in this name since 2020. I have an average cost basis of around 120 a share, and it has not been an easy hold. The name fundamentally, it's baby Amazon. It's a fifth the size of Amazon's business. They're getting into AI, and not even that component of it, just what Baba does. I like that business model. But for the last 5 years, it's been annoying because the name has not done much. So when you're holding names long term, these are sometimes the realities that, then you can be in the name for 5 years and nothing happens. And then you have a month or two when the name goes up, 60, 70%. And now all of a sudden you're seeing a much bigger gain in that account. And now you start to think, oh, maybe I can sell some and buy it back cheaper. And that's for me a big red flag. When I said earlier this week, to myself, okay, I can sell some Baba here and I could buy it back at my cost basis. That was a red flag that I should not be doing anything like that because that's not gonna be the time it's gonna happen. And this is a 5 year base that's finally started to break out. This is now the time to be patient and sit on your hands. I'm more talking to myself here, but this is the time to be patient. It's easy to be patient when the name is below your cost basis, but once it starts to get above, especially with long-term holdings, that's when you start to find those reasons or excuses to sell. And there was nothing fundamentally about Baba that changed for the worse. Quite frankly, the fundamentals have only changed for the better over the years. So my only reason for selling was purely profit, profit motive. And once I realized that, it was like, that's stupid. Don't do that. Stick with your winner. And again, just like Tesla, with that little selling today, this much bigger pattern, this name still can come back to my cost basis and even come lower, still be totally fine before that next move to 200. And then ultimately, probably a year down the line, or maybe 2 years down the line, the retest of 300. So this is where, if I've been in this for 5 years, I have to stick with this is where I'm selling. I want to sell up here. I cannot give away a 5 year hold for chump change, 30, 40, 50% over here. Can't do it. So this was a big lesson for me. And this is the tough reality of the long-term holds because this part is easy. Any person with no trading experience can sit with a loser. It's very easy to do. You forget about it, you move on, you do anything else. 5 years later, you go back to it, it's up, great. But once that name starts to become a winner, that's when you're watching every day, you're micromanaging it, looking for reasons to sell, and then you give it away and you look back a year ahead and you're like, what was I thinking? Why did I make that mistake? So these are the tougher lessons that it takes years to learn because you have to be in them. And again, it could be one simple click of a button can undo years of work or years of buying because you see some green on the screen. So that was a big lesson for me. Stuck with the whole thing, not selling it. If I do sell it, tell me I'm an idiot. But that was the big lesson for this week on my end. And hopefully it can help you avoid that same lesson or same almost mistake. So I'm going to go over a couple quick big picture alert trade updates for anyone that's still in them. And then we'll go over some top ideas once we get through these last few. So we have this WST that's still continuing nicely out of this base here. We're looking at it through this 250. Again, stop was break even, 249. And again, the target is for this move back up into this resistance area. So far it's been working very nicely, kind of pulling a little bit. Expect the next push higher. But again, the big emphasis here, if you're not a member, we're always trying to find extremely tight entries and buying with the trend. I want to buy up, I want to buy on the way up with very tight consolidations. And that's what you can see here. Buying 250 versus at the time 246, barely a percent risk here, and pushes $14 higher at its best. Next, we have this GLW. Same thing here. We're trying to find tight consolidations, tight bull flags at highs. This was a nice earnings breakout through that 66. We see it come back, retest, cannot break what was resistance. Now it turns into support and then just drifts higher. That's exactly what you want to see at a breakout. For right now, a few days back, prior low a day again. Three back-to-back dojis. The name is climbing higher, but we're getting some indecision. Again, after this move, 60 to pretty much 80 in 2 weeks. Not too surprising. So if you're still in it, you know, low a day, prior low a day, or 74, all seem to be good areas. Next up, we have this KNSA. Again, textbook bull flag, very tight consolidation, buying 34 versus 33, dollar risk, 2% risk here, and you get, $4 move higher. But now we're starting to see the next little flag forming. But this is where, this is kind of the profit taking time. We're starting to see a little bit more selling pressure coming in than we're seeing just visually. We're starting to see a little bit more red candles than we're seeing of green. If you're in it and you haven't taken profits yet, any push below this 35 half, once it breaks this, it's more likely to come back and retest 34. So, you want to just lock some in when you can, especially on the way up. So, for any of you guys that are still with me, if you want to unmute yourself, if you have a top idea, just mention the chart, the ticker. I'll type it up, tell me the game plan, and then we can take it from there.
I had put a few names in the chat
All right,
earlier
let's
today.
see.
Yeah.
We got spot. Okay. Spot 725. So Adrian's looking at spot 725. Let's just zoom out a bit. Okay. So we got a nice little wedge forming. And we're looking at 725. Okay. All right. So we got a wedge in this Spotify and entry 725. Again, still a bit wide here. You got resistance 725, you got support 680, kind of 50-point range here. Not the biggest fan of the wedges just because a little bit more difficult to spot for the average trader where bull flag very black and white, but definitely can see the pattern. Again, in the short term, best case scenario is a move to this retest this prior high. Again, we went over a couple examples before. I'm gonna get rid of all these lines to keep it a little more simple, but we know resistance comes in at the retest. So you want to just find an entry on tight enough risk where the expectations will be, okay, I'm going to buy 725. Realistically, best case, I'm going to move to 785. So 60 points, plenty of upside, but you don't want to be buying 725 versus 680, giving 40 points to make 80. So just let this develop. Kind of reminds me a little bit like this Cisco, where we saw that similar wedge, maybe not as defined. Was it Costco? Cisco? I might be mistaken. Um, maybe it was. Hold on, let me see. So it really wasn't a wedge. I take that back. But um, yeah, not a relevant example in this one. So apologize for the mix up. But again, for spot, just let it tighten up a little bit more. Definitely want to see a lot of volume on that break. You want to see, a bar like this bullish engulfing close through that 725. You don't want to see these kind of candles the day it pushes. If it gets up here this week and it closes like this name is not breaking out of that wedge that time. So you want to see the break of that wedge, real confirmation that buyers are there. You see a bar like this, you're right, amazing. You see it tickle that 725 and close 722, get out of Dodge. So um, we'll keep this one on the radar. I'll set some alerts. So I'm keeping a close eye on it. For Abby, you got a couple ideas. We'll run through them. All right, PGR 250. Amazing base here. I'm going to zoom out a bit more in a second, but nice base. Also could be massive bear flag, but macro support at this, what is this, 240-ish. So we can see going back 2024, other than this little shakeout here, this 240 continues to respect this area. Now, initially, not the biggest fan because this looks just like a massive bear flag. And we're seeing just lower highs with the name. So I'm getting more of a short through this 240 than a break above. Now, if it does break above this 250, it's got a ton of room here. What I mean by that is there's really not many clear pivot highs to get in the way. Prior all-time highs, you kind of have this little spot here, but if it does break to the upside, 250, you probably get a quicker move to 270, kind of pulls back in, and eventually, a few months on the road, you get that right up to 290. But markets at highs, sectors are at highs. This name kind of at 52-week lows. And if you were to flip this chart upside down and you put this resistance, this support level as resistance, we would be dying to buy this 240 if you literally just took the chart and you flipped it. So unless there's a really big break on a lot of volume to the upside through 250, this kind of looks more just like a broad bear flag, probably an avoid. But again, Abby, you had an insane amount of great ideas. Even that WST was one of your call outs. So you've been doing phenomenal with spotting these bases. But sometimes, you know, we don't want to buy every base. Um, all right. So next one we have CME 264. So again, trying to buy it on the way back up.
And this one does look more bearish.
And again, this is, markets are doing this, and this name is doing this. So this one too, for me, pass. It's little consolidation here. There's nothing really screaming out about the current low. I can see, 250 going back a bit was kind of support, but again, we don't want to be like we want to be extremely selective right now. You want to be focusing on the best of the best. This just skip it. Nothing, if it wants to pull back in, again, you're going to have to battle with every one of these little pivot highs the whole way up. Every one of these little things here. That's going to be, battling with resistance. It's just been just choppy this whole way up, choppy this whole way down, on to the next. Um, we got NSC, looking at it through to, no, yeah. See, Abby, I definitely can't hear you. Let me see if you're muted.
Yeah, sorry, I was just saying the same. I'm not sure if you can hear me now.
Let's see, Abby, I think I unmuted you now, but I can't hear you.
Can you
It
hear
might
me?
be my mic, um, but I can see anything you're saying in this chat, so I can, whatever you're saying, I can pull up in real time. So NSC, we got 276. 276. So it's again, it looks like it would have gone today. Again, what I try to articulate in the newsletter this weekend was if I ask what's the setup, probably a pass. So looking at it real quickly, definitely can see 280 just in the short term of just that resistance area. Reality, really 290. Again, that through all-time highs, that's going to be, I'm sorry, not all-time highs here. Um, for this NSC, until we see a break of 300, not worth the time because this is going to act as resistance when it gets up there, however long that takes. So it's going to take time. It's going to have to get up to here first, consolidate, and then break that area. So I'd much rather keep this on the watch list because again, through 300 looks phenomenal, but randomly somewhere in here, not worth the headache. And HLT, we talked a little bit about it before. Again, most likely going to shake out this 270. Maybe it's going to come down to 260. Who knows? But 280 key spot. All these big breakouts, all-time highs, to get in $2 early, not worth the effort. I'd rather pay up to $2 and have confirmation that it's going to go than buy 278. It gets up to 280, holds there, comes back in, and you're sitting with it for 2 weeks, frustrated with it. You get shaken out, and then it goes 2 weeks later, and you're like, why am I not in it? So with a lot of these names that are near blue sky levels, I'd rather pay up for confirmation of the break of that blue sky than sneaking in a little early. Adrian's talking about Home Depot. So let's take a look there. Home Depot monthly. Monthly. So I don't really see the cup and handle on the monthly. Okay, I can take that back. I do see it. Um, big. This is like a Dunkin' Donuts cup and handle, or a big gulp. Big. Kind of big cup there. But let's zoom in a little closer. Let's go to a weekly. So we're kind of getting pretty close to the key resistance area. So you have this kind of, let me zoom in a bit more so it's easier to see. So we got all-time highs. This is back 2022, 420. Gets up there. What is this? One, two, almost 2.5, 3 years later. Again, doesn't really get 50%-ish range, but gets back up there. You get this little kind of fake out move. Again, buyers just not ready just yet. Clearly, sellers still in control. Now it's back here again. So each subsequent attempt increases the probability that it's going to go. So since 2022, we've had one, two, three. This is now the fourth major attempt at this level. Again, more attempts, 3 times or more major attempts increases those odds. Retest, we're never buying. Third, fourth, fifth, sixth attempt, we want to keep a closer eye on. So zooming into the daily, let's pull up some volume. Let's look at an EMA. I mean, EMA is super tight. Volume's pretty good. I just hate the Mickey Mouse, this tight little, there's nothing here. There's nothing to shake anyone out. You almost want a shakeout. You almost want like seeing where it is today reminds me of what it did here in 24. So like it again, how tight this 5 EMA has been, how strong the market has been, how strong Dow 30 names have also been. This probably does drift higher, but this doesn't scream Tesla breakout through that key level. This looks like you get this kind of move. You get a little break, you probably retest the actual all-time highs, which is like kind of an insignificant level, but maybe you get that push to 440, and maybe that 440 becomes the bigger pattern. Who's to know? But I think for right now, looks amazing. EMA is on your side, tight consolidations on your side over the last week or two. that if you're going to buy, like if we went over, PGR, CME, NSS, HLT, and Home Depot, and there's a gun in my head, I'm buying Home Depot. I'll buy it through 240, through 425. I'll have a stop for now versus pretty much the break of the 5 EMA or 411, this pivot low, and I'm giving it $10, and my target's going to be, 470, 480 if I'm taking this trade here. So looks really good. It's just um, this little consolidation. I don't see that explosive break. I see that kind of like break and, it comes back and messes around, but eventually the path leads higher. So definitely keep this one on the radar. All right, Nicholas, we got TBBK 77.55. So even with entries, entry always above the nearest whole number. So if you want to buy 77.55, probably better off just waiting for 78, unless, again, we're going to look at this specifically, but just broadly, way up, nearest whole figure, way down, below nearest whole figure. So we're buying 78.05, we're getting out 70.49. But let's let's take a look. So this name is, I'm going to get rid of the 5 EMA. Name is super strong, could not be stronger, could not be more expensive. Exactly what we want to see from a name, path of least resistance, and this name has been higher. You're not fighting with anyone. The name has just been pushing higher. We got rare time where the retest really breaks on volume, closes bullish engulfing. That's the exception to the rule. This is the retest, flies right through it. Probably some kind of some news on the name. Again, not really familiar with TBBK, but little flag forming here over the last couple of weeks here. And, couple of tight inside days here. So I see your entry. You're trying to buy through these, kind of inside day high here, which I understand. And if you were to do that, I would keep it versus that prior inside day low. So if you're going to buy 77.55, or if I'm buying 77.55, I'm out below this low if I'm wrong. And you really want to see, again, you're not going to expect, or you should not expect this kind of bar through this break. You might get this kind of bar, because again, it's a very tight consolidation here. It's also kind of a Mickey Mouse flag, and just it's only been flagging out here for, 2 weeks now compared to, you know, Tesla flagging out for 8 months. This is a tiny little like pennant here. So sure, you could buy through 77.55, keep it tight risk, $2 risk here. But just know day one, like our IDXX, we didn't get that follow through today. We didn't even get this kind of bar. And I'm like, okay, I know for tomorrow, if I don't get the follow through in IDXX, I'm hitting the eject button and I'll move to something else. So looks good, but just be aware that if it does break, you probably get this day one move. Wouldn't wouldn't be banking on like this big move. Um, and again, the EMA definitely getting very tight here. Support in the name, definitely all the things you want to see. You want to see that 5 EMA catch up. This is kind of what we need to expect from Tesla. We need that EMA to, kind of catch up and support it before that next, leg higher. All right. So also you're looking at this MTZ 194 versus 188.89. So love the stop price. Let's see. So 194.11. Mm-mm. Okay. Let's see prior high. So we got prior high is 194. We get a retest here, 194. Now this to me still is like a retest area. Technically kind of retested it 2 days ago. It's right back up there. But this still is like, this is still chalk it up into this is the retest. So had a big, big move on Wednesday in this, in this flag. And I believe this is blue skies. Yeah, so it's all-time highs here. So again, if you're buying it tomorrow through 194, 187, this prior low day 187, you had 188, so you have a low a day here. So either one, again, you're expecting a breakout. We should never see this low a day or this low a day, regardless, in a breakout. And this is something where when I do a lot of first time trade reviews with newer members, these are the trades that they give way too much back in, meaning, okay, they buy 194, looks great, comes back in, takes out this low of day. They're still in it, where their stop is like down here. So they get one day of action higher. I'm going to pretend this arrow is the candle of the break. And then day two, it's closing here where we should be getting out. But then we see them hold it, down to here. They get stopped out and then they, rockets back to highs. So with this retest area, my point of this being is if you're expecting a breakout and you get this little breakout, little, tiny nothing of a bar, keep this risk as tight as humanly possible because it should not be coming back anywhere near your price. If you get that big breakout, awesome, super right, definitely stick with it. So these are just little things where, is a blue sky breakout. It didn't develop long enough for its third or fourth attempt, but if you want to take the shot, and then just know if it's not immediately right, look for the door. Let's see. Joe is looking at A Lab. Abby, of course, always here to help. Again, on your end, doing great with what you're doing. Just the less is more. Focus on those couple ideas. You don't need to be in 10 or 12 names right now. But other than that, chart wise, doing great stuff. All right, so Joe, looking at A Lab. No setup yet. And curious of your thoughts. So Joe, always have a game plan. Um, again, this A Lab, I'm going to get rid of the 5 EMA. 100 breakout here. Put this thing in the Louvre. Amazing breakout. If there's anything you take from this chart, if you can only find this pattern after this consolidation, this is all you have to do is just find this pattern. This is what I look for every single day, is look for this tight consolidation under a major level that has not been able to break. Couldn't break 100, can't break 100, can't break 100, can't break 100, can't break 100. Finally goes 100% higher. So love that breakout. We need to find more of those. Right now, nothing to do here. You know, we're talking about retests. We, don't really want to buy retests in that MDT example before. Again, always exception to the rules. Here's the retest. Amazing break. Phenomenal. Clearly, they don't care about the retest. Great sign to see. So for that MDT, this is the candle you see tomorrow through that level. Super right. Awesome. Up here, nothing to do. 3 dojis at highs. Thing is already gone 70, 80 points. This is a Tesla dollar kind of move. 2 weeks. Super late. No setup. And the big red flags are you said no setup and you said, what are your thoughts? 99 out of 100 times, if the best idea is what is your thoughts, there's no trade. You need to come in with this is the pattern I see. I see a bull flag, I see a wedge, I see a base. Whatever the pattern is, I see that. My entry is here. My stop is here. What do you think? That's the normal proper cadence. If it's what's your thoughts, I could already tell you there's no trade there because there's no skin in the game, like no homework. You're copying off someone's homework in that example. So you always want to come in with no. I know, I'm seeing your messages right in real time, but these are just points I try to clarify because we get asked or we see it in the chat a lot with newer traders when they ask those questions, and it's just for me, it's that red flag. So you know, not disparaging in any way. Just you want to come in with those setups. Um, all right. I think we touched on a lot. It's probably one of the longer ones that we've done. Again, thank you guys for staying in this whole time. Again, we'll keep doing this every week. And again, for those guys in Tesla, keep rocking with it. Let it pull in, let it do what it has to do till it negates that 5 EMA. Everything looks fine and dandy. Ideally, fills the gap tomorrow. Gaps like to get filled no matter what. Didn't fill it today. Expect, probably a 2 or 3 day pull in, and then we get that retest, maybe flags out, and we get the next run. Who knows? But we've had some really good trades in our hands. Stick with the winners. Less is more. Finding one Tesla is going to be far better than 99 other trades. Stick with what works best. So, see you guys in the chat tomorrow. Thank you guys for tuning in. If you guys want to drop a little thumbs up, greatly appreciated when we post this video in a little bit. All right. And